Igual você lembra. Hello, assalamu alaikum. Can everybody hear me? Hello. All right, it will reappear. So for now, what we are observing at the moment in Euro USD is a corrective structure which is still being formed. It is still within the process of completing its formation. So I'm looking forward to this order block. As you can see, I don't know why it shifted to this point. This is not the OB, sorry. This one is the OB, and this entire region was basically the upper half of it is uh, just a moment. All right, the screen is not being shared. It's one and the same thing. I've refreshed the page, waiting for the chart to reappear. I'm trying to tally it on another device. So kindly be patient with it. I don't know why the screen is not being shown over here. Let me try another way. After I disconnect this, it appears just for a moment. Okay, I think my screen is visible now. Let me try changing the chart. And I think I need to buy a new laptop as well. So am I being audible, and is the chart visible to everyone? Okay, so now that everything is in place, I will get back to explaining my forecast on Euro USD for this New York session. The New York session has opened and we have reached the 50%, that is the discount zone of this entire impulse, which broke the previous high on H1, this zone, this high, this higher high. So this was broken by this very impulse. And at the moment, the upper half of the box shows 50%. This one is 61.8, and the lowest part of the box is 78.6. So I'm looking forward to Euro USD reaching our points of interest and then showing some bullish reaction in shape of shift in momentum towards the hawkish side and some break of a lower high that will 100% confirm another higher high being formed at the H1 degree. So we are gonna wait, especially for the news release that is at 6:30 or at 6 p.m. PKT. Yes, it's at 6:30 p.m. PKT with speeches from three central banks, that is Bank of England, Bank of Japan, and Federal Reserve Bank of America. It's going to be uncertain for me to decide at this very moment what the governors and the chairman have to speak at 6:30, but at 7 I am sure that the USD news is going to act as a catalyst and move the market. And my perspective, my bias, or the move within the trend which I'll be looking forward to is bullish, in short. So this is the first hourly candle of New York session, and it's like the first hour of London session, or an hour prior to the London session, that is the Frankfurt session. So during the Frankfurt, there is a manipulation or a liquidity hunt in the opposite direction, and same goes for the first 1.5 hour of New York session, where we might witness some kind of manipulation. So for that purpose, we are gonna wait for at least this hourly candle to close and maybe another 30 to 45 minutes for the market to show its hand, how it's going to play and unfold itself. And then we can decide if there is going to be a good setup for us waiting, or we might play our hand another day. Even at the moment, there is an OB on the M5 degree, which is the minor degree when we are talking about wave analysis. But since a few losses in past 2 to 3 months, I've realized that OBs or imbalances, they work most efficiently at higher degrees, because at lower degrees there are multiple OBs, multiple FVGs which can be taken out. And in order to minimize the noise, you can take the entire impulse of at least the M15 degree of trend and apply your Fibonacci within that direction of the trend to find your best or high probability zones for the next trade setup. Based on this, I'll be waiting for the market to either reverse from this zone or maybe drive a bit lower towards this white horizontal line, which is my 78.6% of the Fibonacci. I haven't drawn anything on the chart. I'm only moving the cursor. Is the chart moving? The chart is also not moving with you. Let me see. Okay, the chart has been stuck since a while at the other device where I'm tallying it with. Oh, all right, all right, all right. There have been a minor mistake. I've been analyzing it on another screen. Yes, I've been analyzing and dictating all of it on another screen, which is why you couldn't see the screen moving or the zones I was referring to. So, in short, thank you. Thank you for the correction. This is the minor zone, the minor OB, which I was talking about. This is the 78.6, the lower part of the box. This upper level of the box is 50%. And this entire move, this entire bullish impulse is on which I've applied my Fibonacci retracement zone, Fibonacci retracement levels. Why? Because this entire impulse is responsible for breaking of this previous higher high, and we have a new higher high being formed over here. And as you can see, the market is moving in a lot of corrective manner, which is why we cannot just consider that this little zone was broken and it has been broken again, and we have a change of character and a break of structure, so we should just go for it. Even if this is broken, still we shouldn't be going for a sell, because as I said, this is M5, and manipulations can take place in a lot of shapes. That brings fear in the minds of the trader, and we deviate from our rational bias. Understood? So for that purpose, we draw levels on lower degrees, that is M5, M1, keeping the entire impulse in regard, the OBs and imbalances as well, which comes within the discount and premium zone. But above all, we focus on the entire impulse, which has brought a shift, which has brought a further continuation in trend, showing a strong control onto the bulls side at the moment in the market. And this zone is still intact. This support level or the supply zone is still way far from this price. So we are going to wait for the news to come in for this hourly candle to close, witness some sort of shift in trend, shift in sentiments in shape of momentum and stuff. And afterwards, we are going to think of taking entries if the market provides us with a clear break of structure alongside uh, shift in momentum. Understood? Shift in momentum can be found through different means. For example, people use MACD, people use RSI. Like, the basic job of RSI is not to tell you if it's oversold or if it's overbought. It shows you the strength of the market, a relative strength, an idea, a perception, not the exact uh, scenario of what is happening at the most back end of the market, as nobody knows that. And we also use awesome oscillator, which we mostly use to find out divergences in wave strategies. And third most basic thing is candlesticks. Prominent bullish or bearish closings above or below the previous highs or lows gives us an indication in regards to the shift in momentum. So I'm going to mute my mic for now, as I suppose this much of insight regarding the forecast on Euro USD I am trying to put in is enough for now. And if there are any updates, I will get back to you guys. Thank you. Hello? Okay. So as we can see, the reasons I explained earlier, the based on which we didn't take an early buy side, thinking that it's a strong buy trend and it's just gonna move impulsively from here and we're gonna miss the trade. So we avoid the FOMO when there is a clear corrective uh, behavior of the market. And another thing for which I've unmuted the mic is that, as you can see, the market has created a low resistance liquidity run over here, according to the ICT concepts, LRLR. So I'm also expecting that this entire region is filled with liquidity and is going to be taken out anytime during the fundamentals release, which is going to act as a catalyst. So I'm still not going to be taking an earlier buy over here because we don't have the other confluences which can give us the confidence of taking a trade over here. So it's better to wait. And those who are thinking we've missed the sell side opportunity, we kind of knew that the market is going to come down into this zone. So why didn't we take it? Because anything can happen when the market is moving in such a manner, especially before a high impact news release. So we have a lot of OBs and FVGs being created along the way, but it has still not broken this low, the point from which a higher high was formed and a bullish impulse was initiated. Let's wait for another 20 to 40 minutes until the news release. And we will also have an idea during the speech conference, which is going to be held in next 12 minutes, that where the market is going to be heading next. And is there going to be any sort of impact because of the speech on this? Because if there is, then maybe the catalyst which we are expecting to work in our favor at 7 p.m. might not turn out to be in that way. So let's wait. Hello, I hope I'm audible to everyone. Let me just check for a moment if my mic is still working, as I don't see many people being uh, live with the stream at the moment, so I need to check from another device. Hello. All right, so now I'm audible. So, as I was saying earlier, that why we were supposed to wait for the market to let it play it play its card, and we didn't go for a trade based on this minor OB, which was although at the 61.8%, and it got liquidated, and still the market is moving in a corrective manner. So we are going to remove this OB box, and let's make it a bit more easier and remove this box as well, so nobody takes it as an order block or something. And when I say order block, by that I don't mean that like, I use these terms in order to make my viewers understand that to which zone I'm basically pointing towards. Because if somebody calls it an order block and you feel like there are orders within this zone, just because some guy, Michael Huddleston, not some guy, all right, he's very well known, that uh, this zone is called as an order block because there are orders inside. Well, nobody knows that. Maybe only some really high financial institutions do, with, I don't know how many $1 million worth of softwares, or maybe some backdoor information being given to them, and through that, the backdoor diplomacy, I cannot find the right word for that, but you've got the point. So if there is anything as such, that is totally a different scenario, and even that cannot be sustained by a certain party on a long-term basis. There are manipulations, there are pumps and dumps, yes, according to some very specific players on the international market. I won't name them, but yes, I can refer to a certain companies, for example, Vanguard, BlackRock, things as institutions and MNCs as such. But even that happens in certain during certain economic events, or certain global events, which develops certain kinds of scenarios which are very much profitable and beneficial for these individuals, or the MNCs, or the political big guys in the first world. So for us retail traders, if there is an imbalance, if there is an order block, if there is an FVG, these are all technical levels, names for one and the same thing. There's not much of a difference, very minor differences. But yes, these things work in their own, like, under their own circumstances. They don't work at all the time, at every level, at every instance, at any day of time. There are specific sessions, there are specific market conditions which needs to be met and only then we can consider these things to align and give us a certain understanding of the next move which might be coming into the market. So as of now, we can see that yes, there is a bullish momentum being entered into the market from our 61.8% of the Fibonacci we marked earlier after liquidating this low. Let me apply the trading session. Which trading session was it exactly? The time of the trading session, I mean. Exactly a few minutes before entering into the New York and leaving the London session, it liquidated this low, which means that there are higher chances of market now providing us with a move into our our direction, which we were looking forward to since a while. Yes, there has been a breakout. This was responsible for the formation of this low, and we can call it initiated from here at max. As this is a minor pullback, there isn't some entire structure as we can see at this point. Just a moment. At this point, there has been a clear correction, a proper pullback, a stay within this zone, forming a kind of expanding or a running flat, and then it moved down to the downside. So over here, it's just been a single leg of a pullback and then a movement to the downside. So we're going to take it this at this. We are going to take this level as the initiation of this impulse, which formed this low. And once the market breaks this as well and forms a closing above this level, like it kind of broke, but it hasn't provided us with a bullish closing above this zone. So for that purpose, we're going to wait for that. And even if it doesn't provide us with one and it comes back into this order block, provides us with a pullback, then we can buy. Let me remove this arrow from here so nobody takes this as a buy signal from this point. I will place the entry and exit over here. So now we have almost, I suppose, 3 confirmations. First, a breakout above this trend line, which can be a liquidity hunt. Second, a break above this zone, but not a closer, but not a closing above this, which is again a little weak. An impulse being seen from this point, but a clear pullback from this zone back below the TL as well, and into almost from where the impulse initiated. So it's kind of tricky for us right now. And do not jump into any buys. Let's wait. We can we can actually take a 0.25% of risk at this place, but before taking any trade, it's better to take 15 seconds. It gives you a review of your trade, and it also gives you a little space and time to analyze the market, how it reacts in the next 15 to 30 seconds. Because within a single minute or two, the market is not going to move 50 or 100 pips right now without any news. It's still pending in next 15 minutes. So a lot can happen in this 15 minutes. So it's better to give some benefit of doubt and take a step back and analyze the market for a while before you have decided to take an entry. It doesn't need to be a singular signal right from your brain to your fingers and just going for the trade within a split second. You should give a little space. There should be a gap, a pause, a break, a block between your brain and your fingers pulling the trigger. And also, it takes time developing that sort of agility in your mind, of your mind, to take to make calculations within microseconds, and you are like, yeah, I was confident enough and I pulled the trigger. It takes a lot of time, it takes a lot of patience and practice to have that kind of IQ to calculate things within a blink of an eye. So none of us are James Bond, and it's better to put a block and wait for the market to do its thing. Right now, there is no bullish shift, and a new low being formed on M1 is just telling us that you shouldn't be hasty with whatever you're doing or thinking of doing. if I came up with another perspective of the market, which might happen if it breaks below this low, which it already did, but it hasn't provided us with a prominent closing. Still, as you can see, the market is leaving a wick behind and is still trying hard enough to break below. So, if in case the market breaks below this level in an aggressive manner and provides us with a bearish closing as well, then we can expect market coming back into this zone and leading for this TL before deciding to push either upwards or go further lower to day after tomorrow. Apologies. So if in case that happens, we're gonna wait for that as well again. Secondly, why am I pointing towards this trend line? Because this trend line is of a higher degree, it's of H1, and this trend line is where the market can take some strong support from and can lead higher, forming higher high, liquidating the previous lower high on weekly. Let me show you, which is at 1.19 or 1.2. Like it can lead into this OV, this zone, which is at 1.2088. But in the near term, I am considering this little zone to be liquidated, which is still standing at 1.18727. That is around 70 to 80 pips above this zone. And I am also expecting that to happen this week. So for that to happen, the market should come into this trend line and then move higher. It can also happen from our current perspective, from our current point of interest as well. As you can see, the market has again shown some manipulative behavior, forming a bullish closing on M5 with a strong bullish momentum over here. Yeah. And also it can, there is liquidity, as you know, below daily or high degree lows and highs, which market can come for liquidating before going for some higher degrees highs or lows. So I think the market is going to show its hand anytime soon. Liquidity grab below, liquidity grab above, calling it a liquidity grab because now there might be some kind of a bullish closing above. But let's wait. Even during even if something like this happens, which is, oh, the market just went away, it's providing us with a bullish candle closing again and again and again. When the news comes, there might be a kind of a pullback into our region before it moves higher. And over here, we're supposed to wait for a couple of seconds to see if the market is going to continue bearish or is it going to go above. Kindly don't mind the dog if you can hear him in the background, as I still need to discover this technology which I'm using, which is this mic. And by the technology, I mean the noise cancellation option, which I still need to read in its menu book and how it works. So kindly adjust with the noise in the background. So in the 3 minute time frame, market has provided us with a tap in into the OB it has formed, but there is no bullish closing, no candle closing above this level. So in case we do take a risk over here before news, which is not recommended to anyone, but still if you want to, or which I might, we can place the SL right below this zone, but to give it some space and keeping it from any sort of liquidity grab, let's place it below 78.6% of the impulse. And as I said, it's going to create a new high that can lead to, I'm guessing it's going to lead to at least 1.1870, but we can keep it to 1.185. So let's see how it works. But this is not recommended, and this is just the idea for you to keep in mind. I don't know why is it okay. When I say buy, only then. This is for you to just have an idea. We have a bearish closing, a strong bearish closing. We're not going to get manipulated by this, but still there is news ahead. So it's better to stay safe. I will remove this and I will place it once it's ready. I have a strong feeling that the market, if it doesn't close in next 3 minutes above this level, there are high chances of market driving down towards this trend line before moving higher. Let's observe. A break of structure will be confirmed once the market breaks above this zone in this manner, and our entry is going to be after it provides us with a pullback. If it doesn't, we are not going to chase our trade, trying to put our trade on hope that yes, somehow it's going to lead higher without giving us this scenario first. See? As I told you, it's better to wait. Let me check what the data has came out. ISM manufacturing, it came out to be strong, hence the dip. Let's see how the JOLTS job openings come up. The ISM manufacturing prices came out to be strong as well. The JOLTS job openings came out to be strong as well. All right. That's a lot of strong data. That's a lot of strong data on US dollar. So we are going to wait again. So as I said earlier, this can be a liquidity hunt again. And we didn't take this trade because one, the market didn't break below this zone after it came down lower. It came back from this point towards this point. But now, as we can see, there is a clear break below the lower high, the lower high from which a higher high was formed. Now we can look for a bearish setup. How? There's a clear break, there's a clear structure. All we need is the market of Euro USD. As we now know that where the market is heading next, which is this trend line. As I said earlier, it can liquidate this low if the market didn't break above this trend line and provided us with a prominent bullish closing. So it did the opposite of what we were expecting. So if the market from this point now goes back into this zone and shows signs of bearish momentum, then we can sell it towards this zone. So let's wait for that. Haste makes waste. Better to wait. So I will mute my mic for now and get back to you guys once there is anything important which I need to update you in regards to the market. All right. Sorry. All right, fellas. So now, as you can see, the market has provided us with confluences onto the bearish side, as we discussed earlier, that it can now go for liquidating this low and can provide us with a touchdown onto this trend line. But let's just keep in mind this scenario in front as well. And this is the OB, which lies at 78.6%. All right. But as we don't have any kind of fundamentals release at the moment, so the trade setup which I shared earlier, this one, stop loss at this place, and this is going to be our TP. So like this 78.6% retracement zone plus this OB can act as a strong point of interest from where the market can take a bullish continuation. Understood? But for that to come in play, the market needs the Euro USD needs to break above this previously formed lower high, then provide us with a retest, and then it will go higher, which is the main higher degree trend that is bullish. But keeping in mind the levels and the technicals, the fundamentals in regards at the moment, I don't think that's going to be happening today. So with a 0.5% risk, like depends on what your risk appetite is, but I keep 1.5% risk per day at max. And this is how it should be professionally. Not more than 1 to 2% should be taken as a risk per day. So of that, you need to take a certain percentage to be placed as a risk exposure on your trading setup. So for example, if you are trading Euro USD, if it's not if it's not an A plus setup, then you shouldn't be putting the entire 1 to 2% on that. You should take 0.5%, 0.7% of that, or 0.25% of that on this on the setup. So as it's a lower degree setup, that is M3, M5, M1, so I wouldn't risk more than a 0.5% on this, and so should you. But a better probability on this trade, as it is against the trend, should be to wait for the market to break below again, then come back as a retest, and then drive into this trend line, as it has been doing since this price. See, it's been moving in a corrective manner. So this entire move, even at the moment, is a correction which is against the trend, counter trend. So it's better to avoid it. But if one wants to take this trade, as I will be as well with a 0.5%, we can place our stop losses over here, our TPs over here. So that's going to be all for today, and see you tomorrow during London.